A happy welcome to one and all. I am Dr.G.Selvalakshmi, Assistant Professor of Commerce, Sri Sharada College for Women, Autonomous, Salem. Today I am going to talk about the appointment of auditor in the subject auditing. Appointment of an auditor because without appointment, how the auditor is going to enter and how the auditor is going to do the auditing work, his appointment is very much required and through a proper channel. So what are the rules and regulations laid as per the Companies Act 2013? So that we are going to discuss now the appointment of an auditor in three cases. One is sole proprietorship, and then a partnership form, and final one is joint stock companies. When we talk about sole proprietors, actually proprietor or individual business auditing is not compulsory. So sole proprietor, in case he need to audit their accounts means they can appoint any one person as auditor. We know auditing is not compulsory, but as per his requirement, the sole proprietor can appoint an auditor. But here one thing you remember, a qualified auditor is not required. He can appoint anyone. May not be a chartered accountant, and anyone can be auditor to do the auditing of accounts. Because it is not mandatory, so no proper qualification is required. Now we talk about partnership form. So partnership also, it is not required auditing. The auditing is non-mandatory for partnership firm also. But still partners are going for auditing because all the partners are not active partners. If accounts are audited means all the rest of the partners feel very comfortable that everything is going smoothly, systematically, without deceiving, without manipulating. So this is the trust they believe. And when the auditor is appointed by the audit by a partner, so one partner suppose say yes, then but the auditor is responsible for rest of the partners also. So he has to very careful, and as per the Partnership Act 1932, so he must know the partnership deed, what they have decided and what are the main rules and regulations related to the partnership. All these things he must study before going to the auditing of this partnership firm. When we talk about joint stock company, it means public companies. So public companies, how we have to go for auditing appointment of an auditors. So there are certain rules and regulations which are laid as per the Companies Act 2013. As per that, there are some rules and regulations that we are going to discuss in depth right now. According to Section 224 of the Companies Act specify the appointment of auditors. The appointment of auditors may be in different categories. The first auditors, the appointment of first auditor and the appointment of subsequent auditor, the auditors of government companies, and the appointment by passing a special resolution. Sometimes the appointment may arise at the time of casual vacancy and the branch auditor's appointment. We discuss one by one in depth. Appointment of first auditors. The board of directors appoints the first auditor of the company within 1 month of the registration of the company, which continues till the end of the first annual general meeting of the company. In case if the board of directors does not appoint the first auditor of the company, in this way the first auditor of the company is appointed in the annual general meeting of the company. Every company is required at its first annual general meeting to appoint an individual or a firm as an auditor. The auditor shall hold office from the conclusion of that meeting till the conclusion of its sixth annual general meeting, and thereafter till the conclusion of every sixth meeting. So the appointment of auditor is to be ratified at every annual general meeting. So individual auditors are to be compulsorily rotated every 5 years. The audit firm every 10 years in listed companies and certain other classes of companies as may be prescribed. The transition period of 3 years provided to the companies to comply with the mandatory rotations of the auditor requirement. At the same time, the auditor can be removed before the expiry of tenure by pausing ordinary resolution in general meeting. Then the appointment of subsequent auditor. At every annual general meeting, auditor is appointed by company by pausing an ordinary resolution. Every company shall at each annual general meeting appoint an auditor or auditors to hold the office from the conclusion of that meeting until the conclusion of the next annual general meeting. So within 7 days of the appointment, give intimation to the every auditor so appointed unless he is a retiring auditor. So it may be stated that here that though the auditor is appointed by the shareholders, in practice the directors make the appointment because of the strong voting positions exercised by the directors through block votes, proxies, etc., and the disinterest of the many shareholders. An auditor so appointed, unless he is a retiring auditor, shall within 30 days of the receipt from the company of the intimation or about his appointment, inform the registrar in writing that he has accepted or refused to accept the appointment in whatever it is. So where at an annual general meeting, no auditors are appointed or reappointed, the central government appoint a person to fill the vacancy. The company shall within 7 days of the central government's power under the subsections 3 of the Companies Act become exercisable, give notice of that fact to the government. So if the company fails to intimate this fact to the central government means, then the company or every officer who is in default shall be punishable with a fine which may extend to 500 rupees. So where it is found that the appointment of the auditors at the annual general meeting was invalid, the new auditor in his place shall be appointed at the general meeting of the shareholders. Appointment of auditor of government companies. Where at any annual general meeting the no auditor is appointed or reappointed by the company shall give notice of the fact to the central government within 7 days. So on the receipt of the notice, the auditor shall be appointed by the central government. In case the power has been delegated to the regional directors, the notice shall be given to regional directors. If any default is made by the company in giving notice, then the company and every officer who is in default shall be punishable with fine that may be extended to rupees 5,000. The circumstances when the no auditor is appointed and when the auditor appointment is void and where the special resolution is required but the ordinary resolution is passed at the annual general meeting. In those situations, the central government may interfere and appoint the auditors of the company. Then appointment of auditor in case of casual vacancy may arise. The casual vacancy means an auditor choosing to act as such after accepting a valid appointment. Sometimes the casual vacancy may arise due to death, resignation, and the disqualification of the appointment of auditor. Generally, vacancy in the office of auditor is filled by the board of directors. However, in case of resignations, it means the casual vacancy is filled by the shareholders in general meeting by passing a ordinary resolution. The ordinary resolution is enough to make appointment at the time of a casual vacancy. So the auditor appointed in casual vacancy will hold office till the conclusion of the next annual general meeting. Generally, casual vacancy will not arise due to a fault of company. The appointment of auditors are made by passing a special resolutions. If not less than 25% subscribed share capital is held by singly or jointly by the some institutions, that is public financial institution, central government, state government, a government company, a national bank, an insurance company carrying on general insurance business. Any financial institution or other institution stabilized under provisional or the state act, and in which state government hold not less than 51 percentage of the share capital. A nationalized bank or the reinsurance company carrying on general insurance business, the appointment or reappointment of the auditors at the annual general meeting shall be made by only by the special resolution. If a company does not pass a special resolution making the appointment of the auditor, it shall be deemed that no auditor has been appointed by the company, and the central government may appoint a person to be the auditor of the company. The provisions is specified under section 224 of the Companies Act. As per section 224A, subscribed share capital means equity as well as preference share capital. Then the appointment of branch auditor. The audit of the accounts of the branches of the company may be audited by the company statutory auditor. The company may decide to have the accounts of the branches audited by a person other than the company auditor. In that situation, the appointment may be made by the shareholders in the general meeting. In case the board of directors can appoint the branch auditor if the company has authorized the board of directors to appoint the branch auditors by passing the resolutions in the general meeting. So while appointing the branch auditor, the board of directors must consult the company statutory auditors. With the consultation of the statutory auditor, the board of directors may appoint the branch auditors. The first auditor of the company is appointed by the board of directors, that the board may also fill the vacancy in the office of the auditors. So such auditor will hold the office till the conclusion of the next annual general meeting, as we discussed in earlier. So the vacancy has been caused by the resignation of the auditor. Such vacancy cannot be filled by the board. It can be filled up only by the general meeting of the shareholders. At the same time, the government, the companies sometimes does not appoint or reappoint the auditor at the annual general meeting. At the time, the central government may appoint and to fill the vacancy. Okay. The company must inform the central government within 7 days. Already we discussed 1 week of the meeting of the shareholders, when no appointment was made to enable the central government to appoint the auditors. So when the auditor is appointed by the board of directors or the company or the central government, the remuneration is fixed in what are all the criteria to be followed. The auditors has been appointed by the board of directors means it is the board which fixes his remuneration. In case the auditor has been appointed by the central government, the central government fixes the remuneration. In case the auditor is appointed by the Comptroller and Auditor General of India under section 619 of the Companies Act 1956, the remuneration shall be fixed by the company in general meeting, and in such a manner as the company decides in general meeting itself. The auditor has been appointed by the shareholders at the general meeting, so it determines the remunerations by the company in general meeting itself. That is, the board of directors, they fix the remuneration. The board of directors has the power to fixing the remuneration. The retiring auditors who is automatically reappointed at the annual meeting means the resolution is to be passed, but refixing the remuneration of the auditors. So the same remuneration, sometimes the same remuneration may be fixed or sometimes it may be revised. It is depending upon the resolutions passed at the general meeting. If an auditor is asked to do any other work over and above the normal work of the auditor, for example, the auditors preparing the final accounts or the auditors preparing income tax returns, he is entitled to get the extra remuneration. The auditor's expenses here it is treated as remuneration. The profit and loss account shall contain the detailed information regarding the payment to him and in his capacity as an auditor and in any other capacities. It's scheduled 6. It's as per the Companies Act explain in detailed the remuneration of the auditors, at the same time the expenses of the auditors. Generally, the auditors have a different classes, that is the joint auditors, branch auditors, as we discussed above in earlier. Sometimes the branch auditors, some exemptions also there. But the total amount of goods manufactured or sold or services rendered means the branch auditor of the company or branch auditors may not be employed in that company means the quantum of the activity shall be the average of the 3 years immediately preceding the financial year. When a company wishes to apply for exemption, it must apply to the central government and state the grounds on which it claims exemptions. So what are the grounds means that the company engaged in trading has made satisfactory arrangement for scrutiny of the accounts of the branch office at regular intervals. It is very much required. The company has made arrangement for the audit of the branch accounts by a person who is qualified to be an auditor of the branch, even though he is an employee of the company. So that having a regard to the nature and the quantum of activity carried on by the branch office or any other reasons, the branch auditor is not likely to be the available at the reasonable cost, or in any other reasons, the applications made on the ground, it may accompanied by some criteria, that is certified by the company, that satisfactory arrangements for the internal audit for the branch office have been made. The certificate from the auditor of the company that arrangements for internal audit of the branch accounts are adequate and that the branch accounts are properly maintained by the company. The statement showing the name of the auditors who has been requested to undertake the audit work of the branch and fees quoted by them should be attached with the applications. The central government is satisfied after making some inquiries. It may grant the exemptions so far. So the central government must send a copy of such a sanction to the statutory auditor of the company and it has read at the general meeting of the shareholders. The central government is empowered to withdraw these exemptions if the terms and conditions of the exemptions have not been observed by the company. Then the auditors appointed as stated above will have all those powers and rights as if he are the statutory auditor. And thank you all for listening this video. I hope you can all understand the appointment of one auditors prescribed under the Companies Act 2013.